So, what if I told you that between 2024 and 2026, one of the oldest assets on the planet went on an absolute tear, a run that left even the pros completely stunned? Well, today, we are diving deep into that great gold surge, what was behind it, what it means for your money, and some really powerful lessons it teaches us. Let's get right into it.
It's a question everyone with a savings account has to ask themselves, right? Especially when the economy gets shaky and the headlines are just, well, chaos. In a world that feels so volatile, where do you even find a safe place for your wealth? What makes something a real fortress? That's what we're going to explore.
All right, so Section 1, an economic storm. You know, the years between 2024 and 2026 were anything but business as usual. We had this perfect storm of global instability brewing, and it had investors everywhere scrambling for some kind of safety net. And in all that chaos, they just flocked to things known to hold their value. And gold, well, it really stood out as the ultimate refuge.
Okay, now let's zoom in on the year that really tells the story, 2025. What we're about to look at isn't just a little bit of growth. No, this is a story of explosive momentum that completely rewrote the record books for gold.
And soared is absolutely the right word. I mean, this wasn't some slow, steady climb up the mountain. It was more like a rocket launch, with the price just accelerating quarter after quarter. Just look at this momentum. It's staggering. The year kicks off with a massive 20% jump, just smashing through that $3,000 barrier. By the second quarter, bam, another $500 is added. And after a pretty solid third quarter, all the volatility in the market in those final months, it just lit a fire under the price, sending it rocketing past $4,300 an ounce.
And here it is, the peak. Gold closed out 2025 at an incredible $4,318.18, a truly historic high. But you know, a number that big, it makes you wonder, what on earth was driving a surge like this? So next up, Titans, the Fed versus gold. See, gold's price doesn't just move on its own. It's locked in this really delicate dance with some of the world's most powerful economic forces. And right at the center of it all is this constant push and pull between central bank policies and the appeal of gold itself. So at the top of the list, you've got the U.S. Federal Reserve. When the Fed messes with interest rates, it immediately changes how attractive it is to hold gold versus, say, other assets that pay you interest. But it's not just the Fed. Central banks all over the world are huge players, buying up gold to shore up their own reserves and protect their economies. And of course, everyone is watching key things like inflation and employment numbers. They're basically a barometer for how healthy the economy is.
But let's be real, in today's world, you can't talk about safe havens without talking about the big new contender, Bitcoin, or as some people call it, digital gold. So during this really intense period of market stress, how did the new challenger actually stack up against the old champion? Let's take a look at the showdown.
And the comparison is pretty stark. On one hand, you've got gold, the fortress. Its value is backed by demand from actual central banks and entire nations. You can't get a bigger stamp of approval than that. On the other hand, you have Bitcoin, the challenger. Yeah, it can deliver huge returns, but it's also famous for its wild price swings and these massive sell-offs by its biggest holders, the so-called whales.
And this quote from the source material really just sums up the final verdict. It says that during the very moments when you need a safe haven the most, the analysis found that these huge Bitcoin sell-offs really undermined its claim as a reliable store of value. It just didn't hold up like its physical counterpart did.
Okay, so if you're thinking gold sounds like a pretty good shield for your wealth, the next question is obvious. How do you actually buy it? Let's break down the main ways to own physical gold.
So you basically have two main paths. The first is bullion, which is just a fancy word for gold bars or ingots. That's usually best for serious, long-term wealth preservation. Your other option is gold coins. They offer a lot more flexibility and are way easier to buy and sell in smaller amounts, which makes them super liquid.
And this brings us to one of the most important takeaways from this whole analysis. Look, it's so tempting to try and time the market, to buy low and sell high. But the real power of gold isn't in trading it, it's unlocked through a long-term strategy of just holding on to it.
So after digging into all the numbers, the market forces, and the investment options, what's the single biggest lesson from this incredible time in gold's history? Well, it goes way beyond just the daily price swings. And here we are at the core message. Gold can be an absolutely invaluable tool for protecting the wealth you've already built. But, and this is a big but, there's a huge difference between protecting your assets and actively growing them. The analysis suggests that real, lasting fortune isn't built on just one asset. It's built on a foundation of knowledge.
So, we'll leave you with this final thought to chew on. If gold is the shield that defends your savings when times get tough, what's the sword you're going to use to build your fortune? The answer, as this analysis suggests, isn't found in any one single investment, but in the knowledge and the strategy you bring to the game.